Been in this space for a long time. I started with a company called Hyper 8 years ago. Hyper was a tech provider for banks and credit unions that wanted to bank high-risk industry. So I got thrown into a bank in Colorado the second that market launched. That bank was one of the first to bank the industry in the entire country. So I was there for the first ever examination of that bank, which was interesting. And what people don't realize is this has been a really involved process from the beginning, and we've all seen the headlines, but what people don't realize is regulatory bodies have had no guidance on how to examine institutions banking this. So while the banks and credit unions took the risk to bank it, the regulators were also learning along with them. So it's been an interesting path, to say the least, but I've been in a really unique place, and what I mean by that is I've been with every bank or credit union at some point that banks this industry nationwide. I've been with most of the licensees that bank at those institutions because I was the only one who knew who was doing what for years, and so everybody in every new market would call and say, hey, I need a bank account, where do I go? And so if we had a client at Hyper that was banking it, I would send them there. If not, we would always find them a home regardless of the situation, even if it didn't benefit us. So the irony here is Hyper was selling a tech platform to banks and credit unions. Safe Harbor Financial was the first institution to bank the industry in Colorado, and they were selling a manual program to other banks and credit unions. So I was competing in a weird way with an institution that was serving the market. Fast forward 8 years, that institution is now going public on NASDAQ this month. I got the opportunity to have all of these financial services in-house now, and so I left Hyper after 8 years to run strategy and business development for Safe Harbor Financial. So what that means for everybody here is there is a institution that will serve you today, right now. You can get your bank account set up pre-revenue. We understand the industry through and through. We're banking every state legal market directly. And so, you know, this narrative that this is a giant cash issue and you're going to be housing it in a basement, which I've seen, is not accurate. We will bank you. You will have access to most every financial service other than credit cards day one. So problem solved. So I wanted to come here, and one of the reasons why I want to get in front of you guys early is because with every new market, and I've seen all of them, every bad actor in the country comes sprinting to offer some kind of off-the-wall financial service to the industry. It's like a bad zombie movie. They come out of the woods. And so, I get the questions constantly of, hey, is this legal? Is this accurate? Is this somebody I should trust? And so, one, again, I want to let you know that we can solve this problem today. Two, I want to be a resource for everyone here. So whether it's lending, whether it's equity, whether it's payments, whether you have a question about bank accounts, please reach out. If I can't help you directly, I'll get you in touch with the best possible party to answer your question or help you. So again, I want to make this fairly quick, but I wanted to open it up to questions because I know this is a very misinformed topic in general. Do you want to ask one?
Hi, I'm Julie. I was hoping that maybe you could give a little bit of an overview of the type of instruments that you're willing to lend against, just a little bit of maybe the types of like the rates and that kind of thing, just get into the details a little bit if you're able to.
Yeah, so on the lending side, I would say it's very typical of like bank lending. So we have to have assets to secure the loans. Typically those assets are at, I would say 65, 70% of their value. So if you're buying a real estate property, we'll typically lend 65 to 70% of the amount that real estate's worth. So if you're buying it for $1 million, you're typically going to have to come in with $300,000 to $350,000, which in mainstream industry you'd have to do as well. But I can't say too much because we are about to go public and that's involved. but we're going to get aggressive, not only on the fee side of things, but also on the lending, and that will give us the ability to really expand that whole program. Go ahead.
Quick follow-up. I've heard a little bit about some folks doing a cannabis estimation instead of just like or doing an estimate, or sorry, it's an estimate, not just on, or evaluation, sorry, on the property. So say you have like a piece of property, you have an evaluation on the property, but they're doing it actually something called a cannabis estimate, which includes the value of, say, your license or other types of assets in addition to just, say, the property or physical assets that a traditional bank would lend against.
Sure.
What about something that you guys also entertain?
So we use appraisers that understand the industry, and they will equate some value to the fact that it is licensed. Because as you know, especially in limited license markets, municipalities, I would argue in a lot of cases the real estate's worth as much, if not more, than the license, right? Because they're so hard to find. So the answer is yes. Can we lend against the license value? No. I hope that helps.
Hi. So I was just wondering if you could just speak to cashless ATMs and people who say that terminals. This is probably more of a question from your hyper days, but from my understanding, the only way to accept payment non-cash is with an app like Hyper. And can you just sort of set us straight on that?
So here's what I'll say. Cashless ATMs are not permissible. And I think we've all seen the Visa notice. I can tell, and again, I want to be careful with everything I say, but I would say that the networks and regulators and enforcement have been looking at cashless ATMs for a long time. That's not hypothetical. And so you've got a couple of different factors here. The cashless ATM, from an enforcement standpoint, is fraudulent because it's misrepresenting the nature of a transaction. Same argument with credit cards right now. If somebody offers you credit cards as a means of payment, they're committing fraud to a bank somewhere. It's not hypothetical. It has to happen. The networks are opposed. So you've got the networks that are looking hard at it. You've got enforcement that are looking hard at it. You've then got regulatory bodies who are looking at the banks that are processing these transactions saying, well, you're not filing the necessary paperwork even though you know those are cannabis-related transactions. So if I had to guess, I would think they wouldn't be around much longer, but I've thought that for 2 years and they're still not shut down. So, it's definitely, it's not gray, it's black or white. I would avoid them at all costs. I will say that there are some payment products that are much more mainstream, that are card-based, that I believe are the most permissible within the framework that we're dealing with, that are not cashless ATMs. More on the debit side, not hitting the Visa, MasterCard networks, if that makes sense. And I can help you with that. I know that's a lot, and I know that probably sounds like Swahili, but I can elaborate anytime.
Good afternoon. How you doing?
Good.
I had a question. So the monthly fees, do you charge flat fees or are they transactional?
So the transactional side happens on the cash pickup typically. Mm-hmm. So you're going to have a cash logistics provider that picks up cash from you as an operator, mm-hmm. takes it to their vaulting facility and directly to the Fed on the bank's behalf. Mm-hmm. Okay, so when they pick it up, it credits your account, then they take it directly to the Fed. That's how it works across the country.
Gotcha.
On the fee side, we have flat monthly account fees. Mm-hmm. Those can grow if it's a large account, but again, we're working on some things that are going to be very beneficial for the industry. And then pre-revenue, I believe the fee's like $25 to $50 a month.
Okay.
So you can have all your pre-revenue accounts, and not have any issues there.
All right. I'll get your information before we leave.
Yeah.
Thank you.
How you doing?
Good. You?
Good, thank you. Pertaining to social equity applicants, when it comes to banking and things like that, will you guys have certain rates or certain programs that benefits social equity applicants or anything like that?
Yes, but I'll take that even a step further. To me, we want to solve this problem for the whole industry. And again, I've seen 8 years of it. I know where everyone's banked. I know what they're paying. This has got to stop. Right? And there's a compliance burden associated with it. And so that's the reason why fees are charged. But to answer your question, absolutely yes. We will do some special things, and I'm planning on making that not just a social equity thing either, but like an industry-wide thing. So we'll get there, but in the meantime, yeah, absolutely.
Thank you.
Yeah.
Hi, I'm Chica. I have a legacy market brand called Creaky Products. Yep. And so we've been in business for the last 5 years. And my question for you is, because we just created our NFT collection, hoping to enter the metaverse. Obviously, that's a whole world that's not even fully functioning, right? But my idea is to create our own token, so Creaky Token, and so that my community can use my token to buy my products. Is that something you guys are working on?
We're not necessarily. We're not working with that, I would say, that genre yet, because this is such a large problem already. So we're trying to kind of like stick to the basics, and then I think we have plans to move into those types
digital,
of things.
Right? Like digital coins and stuff. That's a whole. Is that like a whole other level from physical cash first? Like
it is, because it's, and I try and explain this to people. Everybody thinks that crypto should be associated with cannabis, and the two solve each other's problems. And in reality, one complicates the other. So you have one really highly regulated, challenging industry that banks and credit unions are trying to bank and understand. Okay. And then you've got a federally illegal industry that banks and credit unions are trying to understand. So I've seen over the years so many times a bank will get into the cannabis industry, or they'll try and bank crypto, and it doesn't go well, and they drop everybody after like 3 months, right? And so we never want to be in that position. I mean, again, this institution's been in it for 8 years, and it was the first to do it. So we understand it through and through. We want to focus on like core competency and then move into that stuff later potentially.
Okay. So are you thinking, and this is the last part of my question, are you thinking that it's going to be a whole separate set of regulation when it comes to like digital coins somewhere down the road? Like, or
yeah, I think it's moving that direction. But then again, if you look at this world,
Well, I want to base your answer on your expertise. Like, what do you personally think?
Yeah, I think it's going to be, I think there's a whole set of regulation coming out on that side. And honestly, right now, I don't think it solves any problems. You know what I mean? And I understand, like, from a marketing perspective, it's a potential loyalty play, but I just think we're a ways off for that being something that's really viable long term.
Gotcha.
You know?
Thank you so much.
Yeah.
I had a question for legacy operators.
Yep.
For them operating right now, they should be going to state chartered banks, right, and trying to put their cash there. Or
yeah. So it's a challenging situation. I've seen this many times over. I'll tell you guys a story. When I was with a bank at the very beginning, we got called by a guy, and he said, "Hey, can you come out to the house?" And so I went out with the CEO of the bank. We went into his house, we went down to his basement, and he had buried a shipping container in his backyard and had a vault door. Wow. And it was probably quarter way full of cash. And the CEO said, "Do you have a forensic audit for those monies?" And he said, "No." And he said, "I can't take them." Because from a regulator standpoint, if you're not licensed and you have cash coming in the door and there's no verification of where those monies came from, it's just as likely those monies came from, you know, a terrorist organization. You know, I mean, they don't see it any different, right? So I would, that's tough. I mean, I would say keep a forensic audit or really keep clean books on those monies. Otherwise, your chances of getting them into the system are not high.
Should they be accepting things through Venmo and Cash App as a way to mitigate some of that?
That's dicey. I mean, you know, a bank is probably going to drop you if they can't validate that you're a licensed operator deriving those monies.
Okay.
You know.
The best way to operate would be to have a secondary business in which you're able to put your...
What's that?
Would have a secondary business to wash the cash.
No, but then you're getting into laundering,
yeah,
you know, and then you're dealing with a whole different set of issues. So.
What would be the most ethical, best way to take in that money and
licensed.
Pay taxes on it?
Yeah, I mean, I hate to say that, but from a bank or credit union standpoint, that's, again, the only conversation that matters is the conversation they have with their regulatory body, right? That's going to determine how long or whether they can stay in the business. And if they're accepting funds from what they deem as illicit transactions, that's a big challenge. We can talk after. Hopefully I can help.
Any more final questions? What if they report their money on a tax return?
It's still, from a regulator standpoint, it's coming from an unlicensed operation that's federally illegal, right? So that's the challenge.
In your expert,
I would love to say yes, bring it in, but that's the reality of the situation, unfortunately.
for operators who do claim on their taxes, do you think there's going to be greater leniency on them in the application process?
I don't know. I mean, that's not really my realm, and I don't want to, I don't want to give you advice that's not accurate. I just don't know the answer to that question.
All right.
Yeah, sorry.
No worries.
Yep.
Thank you, everybody. Thank you, Tyler. He killed it. Oh, one more?
Yeah. Her or me, I don't know which one. I think he might have been talking to me.
At what point will you be able to handle accounts in New York State?
Now.
Right now?
Yeah, right now.
Okay, so
right now.
We don't have to wait until we get the actual.
Nope. We can open pre-revenue accounts right now for everybody. I mean, it'd probably take a day.
Okay.
Yeah. So and then you can bring all your investment funds in. Obviously, we understand the business through and through. So, a lot of people play the game, well, they'll open accounts at Chase or B of A or wherever. They find out quick, and they'll give you a 30-day notice that they're going to shut down your account, and it's gone in 5. So, again, hence part of the reason why I'm here.
Okay, thank you.
Yeah, welcome. Good. Anyone else?
All right. Thank you so much, Tyler.
You got it, man. Pleasure. Nice meeting you.
You're going to open accounts today. Hunt him down and go talk to him. Get your money right.